Ethereum scaling paradox, the invisible backbone of DeFi. Ethereum's growth has ignited a paradox that's shaping its future. Its rise might actually cause it to fly under the radar more than ever before. This is a story about a network that's poised to dominate, but risks fading into the background unless it finds a compelling way to stand out. But here's where it gets controversial. Could Ethereum's impending invisibility actually be a strategic move? Or is it a quiet danger that might undermine its cultural and economic influence? Over the past 10 years, Ethereum has established itself as the foundational blockchain for on-chain finance. It revolutionized digital assets by introducing programmable tokens, paved the way for the tokenization of tangible assets from real estate to art, and fostered the explosive growth of decentralized finance, or DeFi. Yet, paradoxically, as Ethereum's ecosystem expands and becomes more technically sophisticated, it faces a new, less obvious challenge, becoming virtually invisible to the end user. The hidden backbone of the crypto world. Ethereum is increasingly morphing into what it always aimed to be, a secure, reliable settlement layer. The blockchain's core priorities, safety, transaction finality, and data availability, remain strong, but the bulk of computation and user interaction has shifted away from the main chain. Instead, technologies like rollups and Layer 2 solutions now handle most of the activity behind the scenes. Innovations like EIP 4844, which introduces blob space to boost scalability, further embed Ethereum into the infrastructure's background. It's like running an engine that's so efficient and streamlined, most people don't see it at all. This move towards greater modularity means users tend to engage with applications and chains built on top of Ethereum, often unaware that Ethereum itself is underpinning everything. While some might see this as a positive, removing complexity from the user experience, it creates a significant risk. If Ethereum is no longer the face of the network, but just the hidden backbone, it might lose its cultural relevance, and its economic power could diminish as well. What's happening to ETH's value? Currently, the value of ETH relies on transaction fees, staking rewards, and payments for blob space storage. However, the way these rewards are generated is shifting. Staking yields still largely depend on inflation. Additional ETH created out of thin air, rather than real economic activity. Similarly, fees for blob space are part of a nascent, uncertain market with unpredictable growth. If these fees skyrocket, users may migrate to cheaper data solutions like Celestia, a competing scalability platform. Meanwhile, if fees drop too low, there's a real danger that ETH's economic model could weaken, making it less attractive to validators who earn rewards. This evolving scenario could turn ETH into something more like a bandwidth credit or low volatility bond, useful perhaps, but far removed from its original vision as programmable money. That foundational concept supporting the new internet economy might be replaced by a more utilitarian role, just a commodity for network data. Governance and fragmentation, the growing divide. Ethereum's dedication to decentralization is both its greatest strength and its biggest obstacle. While it ensures a resilient and censorship-resistant network, this commitment often leads to slow decision-making. Key upgrades, such as proposals for proposer-builder separation or shared transaction sequencing, have been caught in complex governance debates. Meanwhile, Layer 2 solutions and rollups are forging ahead, each creating their own islands of activity, which leads to a fractured ecosystem. This fragmentation shows in everything from wallets and bridges to gas token standards, making the user experience more chaotic. It starts to feel less like a unified network and more like a loose federation of separate projects. If that disjointed reality persists, and users can't see or feel the benefits of the underlying infrastructure, they might lose interest altogether, seeing Ethereum as just another blockchain, not as the innovative powerhouse it was meant to be. Crafting a clear and engaging narrative. While Bitcoin has successfully branded itself as digital gold and Solana emphasizes speed and user-friendliness, Ethereum lacks a simple, compelling identity. Terms like settlement neutrality or governance minimization sound abstract and don't resonate with everyday users or even most developers. Ethereum's strength has always been its core values, but they need translation into a story that matters to mainstream audiences. To remain at the heart of crypto's future, not just in infrastructure but in culture, Ethereum must develop a resonant narrative. Why should someone hold ETH as an asset? Why should developers prioritize building on Ethereum? Why should users prefer Ethereum-based applications over alternatives that might be faster or cheaper? What's the path forward? First, ETH must stay the exclusive payment method for core network services like blob space. No workaround or abstraction should dilute demand. Second, its economic model needs to shift from relying on inflation to generating actual revenue through activities like blob space ownership or proof verification, ensuring rewards are tied directly to meaningful network use. Third, the user experience across the entire modular ecosystem must become more integrated and seamless, making the journey feel like using a single coherent platform rather than a collection of disjointed parts. And finally, Ethereum must move beyond whispers about values like decentralization and neutrality. It needs to communicate these principles clearly and convincingly. When people understand that Ethereum stands for financial access, censorship resistance, and ownership without permission, they'll have more reason to care. Ethereum's moment of opportunity. While Ethereum is unlikely to vanish or be overtaken anytime soon, it's decentralized. Integrated architecture makes it robust. It faces the real danger of fading into infrastructural obscurity if it doesn't act proactively. It will continue to secure vital applications, hold enormous value, and underpin a vast ecosystem, but without deliberate efforts to shape its future culturally, economically, and politically, the network risks becoming more like a utility, visible only when broken, and easily replaceable, rather than a vibrant, innovative community with a compelling identity. Owning the future of blockchain isn't just about providing secure infrastructure. It's about setting standards, inspiring innovation, influencing how people experience and interact with crypto, and nurturing a culture that attracts developers and users alike. Ethereum currently outsources much of this leadership to secondary layers and external narratives. To avoid becoming just the protocol everyone depends on but no longer cares about, Ethereum must reclaim the narrative, shaping not just the technology, but the ideas and experiences built upon it. Victory is only complete when it's paired with leadership. Otherwise, it's just partial success. Ethereum's 10th anniversary, $100 billion institutional crypto treasuries, future price surge. Crypto treasuries hit 100 billion milestone as Ethereum turns 10. In a bold milestone for institutional crypto adoption, corporate cryptocurrency treasuries have reached a staggering $100 billion in collective investments. This comes as Ethereum, the world's second largest cryptocurrency, celebrates its 10th anniversary. Ethereum's birthday has brought renewed corporate interest, with the 10 largest corporate crypto treasury firms amassing over 1% of the total Ether supply since June, according to a report by Standard Chartered. The bank predicts corporations could eventually hold 10% of the total Ether supply, potentially pushing Ether's price above 4,000. Emmanuel Cardozo, market analyst at Bricken, notes that Ether's corporate adoption is happening faster than Bitcoin's, as Ether allows corporations to tap into staking yields and actively generate value. Over the past decade, Ethereum has become the largest decentralized finance DeFi blockchain with nearly $85 billion in total value locked. Ethereum's co-founder, Vitalik Buterin, circulated an early version of the white paper in 2013, and the project officially launched in 2015. corporate cryptocurrency treasury firms, including Strategy, Metaplanet, and SharpLink, have collectively amassed about $100 billion worth of digital assets. According to a Galaxy Research report, Bitcoin treasury firms hold over 791,662 BTC, worth about $93 billion, while Ether treasury firms hold 1.3 million ETH tokens, worth more than $4 billion. Corporate buyers are becoming a key source of Ether liquidity, alongside U.S. spot ETH exchange-traded funds, which recently posted 19 consecutive days of net inflows, a record for the products. More corporate buying and continued ETF inflows may help Ether surpass the $4,000 psychological mark. But here's where it gets controversial. Standard Chartered believes Ether treasury firms have more growth potential than Bitcoin treasuries from a regulatory arbitrage perspective. Do you agree? Let us know in the comments. In other news, Abu Dhabi-based Bitcoin miner Phoenix Group launched a $150 billion strategic cryptocurrency reserve, becoming the first publicly listed company on the Abu Dhabi Securities Exchange to establish a digital asset treasury. The reserve includes 514 Bitcoin and 630,000 Solana. Japanese investment firm Metaplanet is seeking to raise $3.7 billion through a new stock offering to support its aggressive Bitcoin accumulation strategy. The company aims to acquire 210,000 Bitcoin by the end of 2027. What do you think about the increasing institutional interest in crypto? Is this a sign of mainstream adoption or just a passing trend? Share your thoughts below. Ethereum turns 10. A decade of revolutionizing finance. A decade of Ethereum, the blockchain that revolutionized finance. On July 30th, 2025, Ethereum will mark a significant milestone, its 10th anniversary. Over the past 10 years, this innovative blockchain, which originated from the vision of a young teenager, has evolved into a fundamental pillar of the cryptocurrency landscape, serving as a vital platform for decentralized finance, DeFi, and non-fungible tokens, NFTs. From gaming frustration to a technological revolution, the journey of Ethereum began in 2009. At the tender age of 15, Vitalik Buterin experienced a frustrating setback when he lost his character's progress in the popular game World of Warcraft due to an update. This incident left him disillusioned with the concept of centralized control, prompting him to envision a more open and decentralized system. By the age of 17, he stumbled upon Bitcoin, which inspired him to further develop the concept of a programmable blockchain. In 2013, he unveiled the Ethereum white paper, introducing the idea of smart contracts, self-executing programs that enable the creation of decentralized applications capable of autonomously conducting transactions and computations. A historic ICO and a defining moment. In 2014, Ethereum made headlines by raising an impressive $18 million through an initial coin offering, ICO. The network officially launched in 2015, but just a year later, it faced a significant crisis when a hack of a smart contract known as the DAO resulted in the theft of $150 million. In response, the Ethereum community made a controversial decision to rewrite the blockchain, effectively altering its history to rectify the situation. This led to a split, creating two separate chains, ETH, which moved forward with the changes, and Ethereum Classic, ETC, which remained unchanged out of principle. This critical juncture not only shaped Ethereum's identity, but also continues to provoke debate among those who argue that the integrity of blockchain immutability was compromised. The rise of DeFi, NFTs, and the landmark merge. Despite these challenges, Ethereum emerged as the backbone of a new digital economy. Decentralized lending and trading platforms began to thrive, and the NFT market exploded, reaching its zenith in 2021 with the CryptoKitties phenomenon, a blend of Tamagotchi and Pokemon. In 2022, Ethereum underwent a significant transformation known as the merge, transitioning from a resource-intensive proof-of-work model to a more sustainable proof-of-stake system. which reportedly reduced its energy consumption by 99%, according to CoinShares research. Reflecting on a decade of impact, today, Ethereum is regarded by major corporations as a form of digital gold. For instance, Bitmine Immersion Technologies, supported by notable investors like Peter Thiel and Cathie Wood, holds over $1 billion in ETH. Other companies, such as SharpLink Gaming and GameSquare, also maintain substantial positions in Ethereum. With the approval of spot Ethereum exchange-traded funds, ETFs, in the U.S. since mid-2024, institutional interest has surged. Unlike futures ETFs, these funds hold actual ETH tokens and closely mirror the market price, representing a significant step forward for DeFi adoption. Even in the face of competition from projects like Solana and Bitcoin, Ethereum remains the frontrunner among programmable blockchains, boasting 96 million wallets and a market capitalization exceeding $430 billion, as reported by CoinMarketCap. From a gamer's disappointment to the foundation of a new financial paradigm, Ethereum has undeniably shaped the last decade. Vitalik Buterin, though often in the background, continues to uphold the principles that have fortified the project. Why this matters for financial advisors? The 10th anniversary of Ethereum serves as a powerful reminder of its resilience and evolution from a mere experiment to a significant player in the financial mainstream. With spot Ethers ETFs now available in the US and a drastic reduction in energy consumption following the merge, Ethereum presents a relevant topic for discussions with clients. For financial advisors, it offers an opportunity to illustrate diversification beyond Bitcoin and explore how digital assets can fit into a well-rounded investment portfolio. For further insights, news, and strategies, be sure to check out the CoinShares Crypto ETF Hub.